5% of the home amount, which South Dakota Housing also helps participate in covering the matching component. And as the general funds under the home program, we do accept applications once a year, which is the end of August. With the home program, we typically have $3 million annually. That we're considered a small state, so we do get the small state entitlement. This year, we are anticipating $3.6 million of program income and about $1.5 remaining from last year. So we will have, again, substantial funding source. As Paul indicated, they are proposing to have the funding bill signed hopefully tomorrow. And with that, we're actually looking at a decrease in the home funding. But again, as being a small state, we should still be getting the $3 million entitlement. Within our program, we have set-asides. They're listed here. So what we're doing, of our $3 million entitlement, we take most of that and break it down into specific type of projects and programs, which consist of homeowner rehabilitation, security deposit assistance. We also set aside $500,000 that we will provide as a grant for projects that are serving either special populations or they're in a certain location, anything that would deem it to be difficult to develop and thus a need for a grant rather than a loan. And we also provide funding for homeownership development. There's definitely more detail on these set-asides within our allocation plan, which can be found on our website. The applications are due the last working day of August, except for the set-asides. Most of the set-asides can be applied for throughout the calendar year. And we're currently utilizing the 2018-2019 allocation plan, which we will just amend for purposes of our changes that we are proposing. We are now going to the Housing Trust Fund. This is also regulated through CPD and HUD Denver. This is actually funded from the Recovery Act of 2008, and funding is still coming from Fannie Mae and Freddie Mac, so currently it's not part of the HUD budget. We are still operating off interim rules, and this program is for extremely low income, so we're targeting 30% area median income. And should funding get to a point where it exceeds $1 billion, then we'll have more flexibility with the program. Trust fund, we received the $3 million minimum allocation. Again, we anticipate that being the same for 2019, but we have not heard what the available funding is for this program. We use all of the funding for rental. It is a required 30-year affordability period, so it's not like home where you have some flexibility. This is mandatory 30 years. It's very similar to home, but it does have separate income and rent limits being published. So you want to keep that in mind, that as you start looking at multiple programs, there are different requirements for the programs. And the last bullet there is, again, anytime housing development does not fulfill its affordability requirements, there are repayment requirements, both South Dakota Housing and then on to HUD. So we do require that our financing be loans and meeting the affordability period as much as we can. Do that. Okay, Housing Opportunity Funds. This program is not a federal program, it's actually a state program. It was funded through 2013 legislative session with Building South Dakota, so as to promote economic development opportunities across the state. And our component is dealing with housing opportunities. Annual funding does vary by year, but we're estimating the $2.5 million for 2019, which would be broken out 70% of the funds for the rural areas of the state and 30% for Sioux Falls and Rapid City. In addition, we do have 75% of the funding going for actual housing development and 25% going towards programs. So this is the dollar amount. Same activities are eligible with housing opportunity funds for new construction, acquisition, and rehabilitation. The HOF program can also be used for programs. So this is where it's a little different, where we can actually use our funds to do some homeless prevention activities, land trust, as well as doing home buyer assistance and homeowner rehabilitation. Definitely more flexibility with this program because we are limited at 115% of the area median income or below. Now I'm going to turn it over to Scott Rounds and let him talk about the Housing Tax Credit Program.
Thanks, Lorraine. Good afternoon. Again, I'm Scott Rounds. I've been doing the Housing Tax Credit Program for about 13 years now, so kind of run through this here. The Housing Tax Credits, it's an internal revenue service program, so it's not HUD, it's not federal financing. You can use credits for new construction, acquisition rehab, and rehabilitation of rental housing. You can do multifamily or single-family developments. And basically the tax credits are going to provide you equity financing for your project. Again, they're not federal funds, and it's not a loan from us, so we will not have a mortgage or things like that, but will be a deed restriction or LURA placed on your property that governs the program. So it's going to be tied to the property or the development that you're using. Income and rent restrictions are at or below, in general, 60% of the area median income. The federal government approved last year a program where you could do some rent and income up to 80% AMI, as long as the overall average of your property was at 60% of the area median income. We do have some special restrictions on that, and we'll be modifying those a little bit just to make sure those are clear this year as we go forward. But for the most part, you'll be allowed to do about 20% of your property up to 80% AMI for incomes, but your rents will still be tied at 60% rents or below. So it's kind of how we'll operate that. Going on, our allocations. Last year we had 3,105,000 in credits. We're looking at 2019, 3,166,000. And then a projection for 2020 should be around 3,230,000. That's going up at about 2% increase a year. We do forward allocate our credits. So basically those that applied last year in 2018, for the most part, most of them received 2019 credits. So once those are awarded or out, we generally do not have anything left over, so we haven't had a second application cycle or additional funds left over for quite a while. So just be aware of that. We are required to set aside 10% of the credits for nonprofit entities. So if you want to apply under the nonprofit, there will be at least 10% of the credits set aside for at least one nonprofit development. And again, annual applications are due at the same time as the home trust fund and all that, the last working day of August each year. We'll get into the proposed program changes now, and this is going to apply to both the home program and the tax credit program. We're trying to keep as much of these two programs, similar applications, similar requirements, as they both work together very well. They kind of complement each other. So we're going to clarify service-enriched housing, and we are also going to add some technical information on the requirements of the Section 811 program. It's a newer program that we've had in the application, but there's been some confusion with it, so we'll try to get more detail in the plan regarding that. We are going to require or incorporate a requirement for management companies, even developers. I'm not sure if we'll go to developers or not, but at least management companies to get fair housing training. We currently have a point category, whatever, for women and minority-owned businesses to get additional points for competitive scoring. We're going to expand that to women or minority-managed businesses. Ownership changes during the affordability period. For those that, we back up here a little bit. You're going to be required, whatever, to have an established reserve account for your operating reserves and project replacement reserves. And we're going to change the requirement there is that the operating reserves will stay with the property regardless of whether or not the ownership changes or whatnot through the extended use period of the development. So basically it's a 30-year or 40-year commitment for those reserves. They're going to stay with the property. We'll make some updates to the project characteristics in the Exhibit 4 of the plans. And I know I have a lot of just little administrative changes within the plan. I know we're correcting some of the language to make sure it's consistent with the management section, using the same common terminology, whether it's affordability period or compliance period, extended use periods, those kind of things. So we'll make those. Specifically under the tax credit program, some of the changes, we're going to eliminate the income averaging option for those projects that are going to have market rate units in there. Just try to eliminate that confusion at all there. Just one more hole in the messer, so we're just going to, at this time here, we're not going to allow those entities or developments that want to do market rate units. That's fine, they can still do it, but your selections have to be at 60 at 40 or the 20 at 50 selection. You won't be allowed to do the income averaging. We're also going to eliminate, if you want to accept the tax credits, you will not be allowed to pursue a qualified contract at the end of year 15 anymore, at the end of the commitment period. That's basically just going to be eliminated if you want the credits. Right now, we only do that for those that extend the extended use period an additional 10 years or go 40 years for the programs. We're just been a big push for it, so we're going to eliminate the qualified contract option. Again, we'll update the amount of tax credits that are available, and I covered that a little earlier, but just looking at 3.1 or 3,105,000 this year and 3,166,000 for 2019 and about 3.2 million for 2020. Compliance fees are going to go up. I think they're $5 a unit, so going from $25 per unit this year to they'll start going to $30 a unit. So not a huge increase, but they haven't gone up in a long time, so those will go up. And again, just under the tax credits, just like I said, little administrative changes, just to correct little mistakes in the plans or make things a little clearer in the plan.
Thank you, Scott. I'm going to go ahead and cover some of the proposed program changes for the home program. And again, I just want you to know that this is not a comprehensive list. This is just to give you an idea of some of the things we're looking at. So when the draft plans come out, you know specifically what you want to go look at and read how the final wording is provided. Under the home program, we're looking at eliminating land trust as an eligible activity. What we found is that they're very difficult to do that type of a project given the program parameters of the home program. We're looking at revising the application timeline for the rural housing development set aside. I think right now we have it in there that starting January 1st, you can start applying for funds under that set aside. That application cycle goes until July 31st, which really doesn't correlate well with our August 31st applications, because then we're going to be kind of doubling up on finishing up applications and getting new ones coming in. So we're going to just kind of scale that back and say June 30th will be the end date for receiving applications for the set aside. And of course, administrative changes as well. Under the Housing Trust Fund, what we have found out is that as we go through the environmental review process, that a phase 1 is required. Luckily, most of the developments are already doing phase 1s as part of their process, but we are going to put that into the allocation plan because it's part of the documentation that we need to receive. So we want to make sure that the applicants are fully aware of that before they apply for funding. We will also incorporate a small application fee. Again, updating the project characteristics exhibit. That exhibit will be consistent among the home, tax credit, and housing trust fund programs. And then also some administrative changes. The Housing Opportunity Fund, this we're looking at just like some cleanup in the language, making sure that people understand our submission requirements, point categories, and that they're correlating across the board, as well as ensuring that applicants understand that once you submit an application, your application is scored based on the documentation we receive at that time. We typically go back to applicants and ask for clarifying information, but that clarifying information will not enhance your competitive score. We're also looking at revising the timeline for the open application cycle. Currently, for the Housing Opportunity Fund, if you are applying for housing development, you can apply, again, January 1st through the July 31st date. So we're just going to move that back to the June, so that way we have a good starting point for the August 31st application, and people are aware of what funding we'd have available at that time. So I'm going to just take a couple of minutes just to talk about this. It's not something that people are fully aware of, but we do have a participation plan which outlines how we gather public input. Again, our programs are here to serve the low and moderate income citizens, and we need to offer every opportunity we can to get their input on how we're utilizing the programs. So we do have the participation plan that outlines the process to gather the input. And we also have a procedure for accepting and objecting comments. So all the comments that we receive today or anytime throughout our public comment process, we do have to address each one of them. So that will then correlate to our consolidated plan or our annual action plan. And then our effort to inform the public. So how do we go about informing them? We always do public notices, we do press releases, but unless we do a direct email, so many times the press releases and paid ads are not being noticed by the general public. So again, we welcome any ideas people have on how to better solicit public input. So now we want to talk a little bit about the timeline and how this is all going to work. And with that, we will then open it up for general conversation. So right now we are soliciting comments, and we have what we consider like an open cycle to receive comments until February 22nd. And at that time, we will incorporate some of the comments that we have received to date, as well as the changes that we are proposing, and we will consolidate that into our allocation plans for the 2019. I should take it back a little bit. You're saying, well, gosh, it's already February 2018, so why are we doing this now? Technically, we cannot submit our allocation plans or the action plan to HUD until they have a budget. So there's still not an approved budget for the home or CDBG program, so they are not accepting our action plans until that point in time. So even though we really should have done this in 18, if we did it, we could submit it to HUD anyway. So we wait until 19 to make sure we're a little bit more current with what's going on in our economy and in the state, and hopefully have it incorporated into our action plan. South Dakota Housing does have a Board of Commissioners meeting on March 5th, at which time we will ask them to consider approving our draft plans. If they so choose, then the next day we will start a 30-day comment period. Again, that's another opportunity to see the actual plans, how it's written, and then provide to us comments on concerns or so positive, negative, or alternative ideas to consider. We're going to have another meeting similar to this on March 21st, which again gives another opportunity for the general public to provide their comments. And then our 30-day comment period will actually end in April. I guess I haven't really talked about this, but on March 22nd, we will have the end of our 15-day comment period for the 2018 annual performance report. So today we've talked about our 2019 annual action plan. So we do that to tell HUD what we're going to do, and then at the end of the year we have to do a performance report. So at this point in time, Paul and I are working on finalizing our performance report for 2018. That will also be released for the general public's comment and review. But we only do a 15-day comment period on that. So that is why that is noted in here as well. April 8th, all comments are due for the action plans and the allocation plans. Then we have another Board of Commissioners meeting scheduled for April 16th, of which we will ask them to approve our final plan. And after that, May 31st, the Emergency Solution Grants applications are due to our office. And August 30th of 2019, we will have applications for the other funding cycles. And as Paul indicated in his prior slide, his deadlines are April 1st and October 1st.
Mm-hmm. Correct.
With that, I'd like to open it up to the general public to see if anyone has questions, comments, concerns, ideas you'd like us to consider. And Doug, if you can take everyone off mute.
the blighted housing, is it going to be absorbed into something else? And it's still, the program's still available, but it's not going to have a separate account.
In regards to the CDBG, there's a comment in regard to...
Okay, I didn't get that.
We heard a little bit of conversation in regards to an account that's, the activity would still be eligible, but there's not going to be a separate account. Was that in reference to CDBG? And maybe that was a comment not necessarily for us to hear, I don't know.
Sorry, I was supposed to be muted.
Okay.
We won't take that one down then.
Okay.
I'll just expand a little bit.
It was about the blighted house.
Okay, so let me expand on that a little bit. Because of the, the $1 million set aside we had each year, the last 2 years, and the lack of applications that we had, we are not doing away with the actual program. It does fall under the Slum and Blight National Objective, so we will still accept applications for that. It's just rather than having it at any time, we are going to put it into the April 1 and October 1 competitive rounds. However, we still want to run the program the same, where with a community that has, some blighted properties, they should get in contact with their planning districts, have a conversation with them. They'll help you fill out an intent to apply. We'll look at that, and we'll try to alleviate some of the problems that we may have with just an application submission, so that you can send in a application that's going to be eligible for the program. So those funds, rather than setting them aside and then rolling them back in at the end of the program year, which is how we do all our set-aside accounts, if they're not utilized during the year, at the discretion of the commissioner at GOED, he can roll all that money into the community project account for the final round in October, and then we try to award it at that time.
Paul, there's another question. Can the CDBG funding be utilized for blighted commercial properties if the city would obtain ownership and then lease or sell to an individual or business?
At this time, the BBB program is not eligible to do commercial property. However, if there is a blighted structure in that community, we can look at it as a slum and blight objective, and see if we would be willing to put some program money, the community project money, towards something like that.
Would this be a good question that they should, an actual comment that they should send to you and asking your consideration to incorporate that into the action plan?
That would be a good one.
Got it.
Yeah, that legit. Yeah.
Thank you. Are there other questions or comments? Okay, I'm going to go back here. We do have our contact information, so if you'd like to follow up with comments or questions, you can definitely send them to Paul as regards to the CDBG program, or to myself, Lorraine, as it pertains to the housing programs. So hopefully you can see our contact information. And just a couple other things I'd just like to go over real quick before we adjourn our meeting here. A couple things to know. We have, within the home program, we have that set aside for community housing development organizations. CHODOs are specific organizations where they are looking at a targeted geographic area. So typically it would be like a neighborhood revitalization, of which some of the board members are either residing in that neighborhood or are considered low income. At this point in time, we have not allocated any total funds from 2017 or 2018. So we are actually bumping up against a timeline for commitment of funds. And I have August 31st of 18. I apologize, that would, it's supposed to be 19, so that's my error there. I forgot that we're in 19. So we do have a deadline that's approaching. I did see a comment today that as part of the proposed funding bill, they are looking at incorporating some extension language in there that would take out our commitment deadline for Chodo as well as the regular home program. So if that's the case, it would give us another year to allocate our Chodo funds. But we are seeking organizations that may be interested in accessing these funds. So if you have questions, please give me a call. Or if you have a project that may work as a Chodo, please let me know. Because we hate to walk away from some of this available funding just because we don't have a Chodo willing to participate. I also wanted to let you know that the Housing Needs Study program that we started 2012, we are now allowing communities to do updates to their housing studies. So for a long time we just said we wanted to do just that one study, but there's definitely a lot of demand to ask for updates. Since some of these studies are 4 or 5 years old, we are expanding program to allow for the updates. The cost basis is still staying the same, so the parameters are the same. So it is 4 years from completion of the original study, or if your community has had substantial changes. So if you really have had a housing change, either you've removed a lot of dilapidated housing, or you've had a new construction of a lot of single-family homes, then that might warrant an update, even though it has been 4 years. So we just wanted to let you know that as well. And that is it for me. But before I let everyone go, I do know we had a few more people join the meeting that were not here when we did the roll call at the beginning. So if you're able to either, at this point in time, let me know you're here by voice, or if you can send a message, that would be great. I'm sorry. Okay, and I'm gonna switch. Oh, we have another question here. I'm sorry. Regarding written comments, do we need to address directly to the person or agency that oversees the program, or we can make all comments to South Dakota Housing? You can definitely send them all to Housing, and I will gladly send them over to Paul. So we work well together.
Thank you.
Thank you, Cindy. I will write down you and Eric as attending.
Greg Powell's on here.
Nice to hear you, Greg. Thanks for joining us today.
Yep.
Okay. Anyone else?
This is Lucianne Zeller. I'm here as well.
Thank you. Okay, there is one more question, so thank you for pointing that out. Regarding the Housing Opportunity Fund, would it be possible to remove the restriction of layering on the over 80% AMI down payment program? Go ahead and send that message in, and we will talk about that again. We're not going to get into it at this meeting today because it's very complicated and it would take up everyone's afternoon. So yes, go ahead and write that as a written comment, and we will address that in the process. Okay. Well, thank you, everyone.
Excuse me, Lorraine.
Pardon?
Excuse me, Lorraine. Lorraine, hi. Jeff up in Aberdeen. I didn't catch that last question.
Oh, Jeff, it was in regards to the down payment assistance with the Housing Opportunity Fund and whether we can reconsider layering if they're above 80% AMI.
Oh, I see. Okay.
You'll be interested in that, right?
Stop here.
Either way, yeah, there is one over here.
I think that is all the questions that I have. I appreciate everyone taking their time today, and please remember to provide us your comments, whether now or during the 30-day comment period. So thank you and have a great day. Stay warm. I don't think it was